Well, hello everybody and welcome to this episode of the ESG and Tech Show. My name is Susan Hayes-Cullerton and I'm going to be your host for the show today. It's always a conversation that I'm really interested in having is all around both of these two key topics, namely ESG and technology. And the reason is because I do think that these two topics, ESG and technology, underpin what is going to really drive forward the next decade in terms of progress and investing and of course everything in between. Now, I'm really grateful to say that I get a chance to share an episode with you on the show every single month. So to those of you who are just joining us for the first time, you are very, very welcome. And of course to those of you who are joining us because you have been a regular over the past number of months and now at this stage years, you're also super welcome as well. Now, I'm going to start off in the same way that I always do, which is by asking you where you are tuning in from. So I'm going to put that out there first. I'm going to give you a moment now to pop your location there into the chat and let me know where you're tuning in from. Now, I'm keeping an eye over here on my screen so that I can see what you're saying and where you're tuning in from. So here's the way in which you can do that. If you're on a phone, which as I say, I'm looking at over here, what you can do is press the icon live chat there in the middle. And in there, that is then where you can pop in, as I say, where you're tuning in from. Okay, so we have Tushar is joining us from Toronto in Canada. Gigi Dutu is joining us from Chicago. Okay, keep them coming in there. And while you're doing that, I am just going to tell you a little bit about where the show came from and what it's all about. Okay. As we look at the past 10 years, 20 years, 50 years, there have been a huge amount of change that we've seen. Of course, it's easy to see that we've had huge technological change. Like literally, as I look here in front of me, right here on the screen in front of me, let me just describe a couple of the changes that have happened. Number one is the fact that we can live stream on YouTube in the first place. Number two, as I'm looking at the VectorVest platform, and I'm going to be taking you through a range of areas of the VectorVest platform today. Up until a couple of years ago, that was not live. And even if I was to go back a couple of years before that, it wasn't on a platform. VectorVest used to be a book, then it used to be a CD, and then it became a platform, then it became a real-time platform, and much more is in store. Also, I've got a camera here in front of me. I've got a microphone here in front of me that I could put into my bag and bring home. So a lot of the hardware has decreased in size, increased in durability, decreased in cost, and of course now is more needed than ever. As I look here to some of my data sources, now we have SaaS, for example, software as a service, where I can subscribe to news outlets and data management centers, etc. All of those are big tech changes, and a lot of them have really changed the way in which we work. The fact that I can stream here live to you on YouTube shows you A, that we can be live and therefore up to the second in terms of what we're going to discuss. But B, of course, there's opportunity wide open to many, many providers for you, whether it might be on streaming services or whether it could be media services that are streamed live, like I mentioned here, on YouTube, etc. So that has really changed the way in which we work and the way in which we can consume along the way. Now, the fact that we can get our data sources A, live, and B, in an integrated way means that we have much greater insight into decisions that we're making, and we can also do so on a collaborative basis. The fact that I have the hardware, which is cheaper, more efficient, easy to cart around, it means that we can be far more mobile. We can, and I have streamed this show from various different locations around the world because I can. And that is what the hardware here has enabled me to do. And as regards getting access to information, and information where again there is a lot of information coming to us now that of course we need help then to disseminate. So from a technology point of view, we can see the impact that a lot of this has made. The question is, where is it going? And of course, how do we invest accordingly? Now, let me take a look over here. Let's see where you are joining us from. Okay, so Glenn's joining us here from Ohio. All Day Productions is joining us from Missouri. Dee Westerware is joining us from Missouri as well. Albert is joining us from New York City. Maria says good morning. Hello Maria, that's one of our regulars. Kristen, hello indeed, Kristen, you're very welcome. You're joining us from northern Idaho. Sheet Metalworks is joining us from Arizona. Danny is joining us from Antwerp, a city I was in about 2.5 months ago at this stage. And Steve has a very common question that I'm seeing, of course, quite a lot, which is why is Tesla being removed from ESG indices but adding oil companies? So we're going to have a chat about that topical area indeed. This is my Susan mug here, just in case any of you forget who I am. I will be reminding you as I'm taking a sip of my water as I go along today. Okay, really good to hear there where people are coming in from, and I can see that there's lots more of you who have joined us here online today. So please do tell me where you're joining from. I'll only be delighted to give you a shout out. Now, let's think about ESG, and let me just walk through what has happened there. ESG is a term that is about 2 decades old, okay, round about 2 decades old. And it's picking up, Steve, on your question there about, removing Tesla from ESG indices, but adding oil companies. Maybe if I can just address that, and I'm going to address that point in the context of the path that ESG has followed. And that is because there is hungry demand for people to invest sustainably. Now, I do want to point out sustainability is different to ESG, which is different to impact investing, right? They're all different. ESG is evaluating the metrics of a company, or as we're going to discuss today, an ETF. It's metrics. It's environmental, social and governance metrics, okay? What you're not doing by investing in ESG is you're not necessarily putting your money into something that money is going to be used for sustainable purposes, okay? You're simply putting your money into potentially companies or ETFs that have got high ESG metrics as a vehicle perhaps to investing with sustainability in mind. Impact investing means that you're not necessarily looking for returns per se, you are looking to invest with impact. Use your money as a vehicle to make a change in the future. Now, that of course is different to ESG, so it's not about the metrics, it's instead about the impact of the money in itself. And I'm going to talk to you about ways in which we can see ETFs changing to have both. Some of them want to weave both together, both ESG and impact investing together. Let's see who we have got here. And I'm going to continue talking then, Steve, about your point. Will is joining us from Palestine. 12 Funds is joining us from Virginia. Larry is joining us from Illinois. And PPK 2900 is joining us from Texas. You're all very welcome indeed. Okay, so moving on then to Steve's point about why might a company like Tesla be removed and instead oil companies be joined. And this is where ESG can get quite, what's the word I'm looking for, a bit catch-all. Is remember, ESG stands for 3 letters: environmental, social and governance. So why can oil companies or many energy companies, or in fact companies that may not have the best environmental reputation, even independent of their sector, how can they join an ESG index? And the answer to that is because they could be good on the S or the G side. They could be very good from a social point of view or a governance point of view. Some oil companies may well be maybe treating their staff very well, donating to causes, running the company very well, etc. And as a result, then it can score well on the S and the G, and perhaps less so on the E. The other thing too, and this is a constant conversation that is in the ESG area, is the other thing, of course, is that it's all down to how those metrics are actually determined. How are ESG metrics really established, identified, held to account, etc.? How does that happen? Because in the earlier times of when I started looking into this, ESG could be very, very, very surface, where companies simply had to make a statement or put something into their value system, or, say something in a mission statement, and then no more substance than that was basically being interrogated. And that is now changing, where we have the taxonomy in Europe, for example, and that's constantly being evolved. Or also, for any of you who joined me last month at the ESG and Tech show, we spoke about blockchain, and we specifically spoke about how the blockchain could be a way in which to standardize ESG methodologies across the board. Who else have we got here now? Judy is joining us from Canada, Vancouver in Canada. Hello, Judy. And JSG is joining us from Illinois. You are very welcome as well indeed. Okay, So how is it that a company like Tesla can be removed and an oil company can be added? The answer to that is it's down to the metrics, but B, just remember that a sector does not give away or does not a broad sector, maybe like an oil company, does not necessarily preclude a company from being added to an ESG index. And certainly there are exclusions. There can be nuclear, there can be defense, specifically weapons. There can be a range of those that are excluded, but it may not necessarily just come from a company that is from a specific sector. But I was anticipating somebody asking that question today. Now, let me take you through what we are going to talk about. Okay, we're going to start off today with understanding the world of ETFs in general. Okay, so I'm going to give a very brief explanation of what they are. Then I'm going to take you through some trends in ETFs broadly. And then we're going to interrogate those trends with an ESG and tech angle. Okay, so what I'm going to do is I'm going to use VectorVest. I'm going to use the system to then answer some questions, because what I don't want to do is simply put on a filter right away and say I only want to look at the fastest growing ETFs in ESG. End of story. That's all I want to do. I'm not going to put on that type of a lens. What I want to do is I want to see the fastest growing ETFs. I want to see why they're growing. And I want to see then whether ESG and technology are a part of that. Then what we're going to do is we're going to look at new evolving ways that ESG is developing to be able to tailor more so towards the needs of people. And we're going to compare the returns of ESG ETFs with just broad-based ETFs. And I have one other hypothesis that I want to put forward to you, which I think is making the numbers look a little bit funny, that I have my own personal view on. So I'm going to share that with you as well. So are we good to go? Are we good to go? I am keeping an eye on my chat over here. And as we go along, what would be wonderful is if you would like the video as well. So just here, if you minimize your live chat here for a moment, or X out of it for a moment, that's what I'm doing over here on my phone. And if you just press the like button, it would be really great if you would do that, because of course the more likes this video has, well then the more that people will be able to find this content as they look for it on the internet as well. Of course, that is also what we're hoping will happen. All right, so thank you all very much for that for a start. And also, please do keep your locations coming in. Please keep your comments coming in. I'm always delighted and happy to see those. Okay, let's start at the top. Let's take a look at ETFs from the beginning. From the beginning. So what is an ETF? Why does it exist? Okay, let's go way back to the beginning of the stock market. And back when, of course, there was no online brokers, there was no VectorVest, there was no data analysis, etc. The whole idea of having the stock market in the very first place actually goes back to a big, really big physics and engineering project, and that was mass transportation. As the railroads were going to be built right across America, it was certainly understood that now, for the first time, big projects were going to be undertaken where a single person, a small group of people, could not take sole responsibility for organising the money. Of course, the profits would be too big, but also the costs could be too big as well. So instead, what needed to happen was, for the first time ever, we needed to create an environment where an owner and a manager could be separate, and where you have a big project undertaking a lot of capital. And that was where the actual stock market came from. Capital markets, broadly speaking, came from. So anyway, moving on from there, then of course, people realised is that if you can buy stock in companies that are profitable and then you get a share of those profits, of course, that's brilliant. So people wanted to buy stocks, but of course people wanted to buy the stocks of companies that were going to rise and not the ones that were going to fall. Now, of course, today we have VectorVest that can help us out with that. But back in the earlier days, the way in which this could be done as best you could is to give your money to people who knew how to navigate and understand the stock market. And of course, that's a really big industry today. But moving on from there, in order to actually give your money to people to invest, the best and most efficient way of doing that was through a fund. And then that was where the mutual fund began. But in 1973, I think it was in 1973, pretty sure it was 73 or 79, but it was in the 70s, then one man came up with an idea, and his name was John Bogle, and he came up with an idea about, what about if you were to have a fund that simply tracked an index? And an index is simply a list of companies designed to help you take the pulse of the market. Of course, the one many of you will know of is the S&P 500. And the S&P 500 is designed to show you how the market is doing based on how the top 500 stocks, the biggest 500 stocks are doing, weighted according to their size. So then, John Bogle, through Vanguard, came up with the first Vanguard index mutual fund. So it was a mutual fund that simply tracked the index. Fast forward on then to 1993. And in 1993, a company then came up with the idea about what if we give people an index fund, but instead of it being a mutual fund where you give money to a company and you get your statements from the company, you have to sell through the company, etc. What about if you were simply to be able to buy what you wanted to buy through the stock market directly through an online broker? What about if it was an exchange traded fund? And so an exchange traded fund was born. And the idea is that it tracked an index. So the costs, or sorry, not the costs, but the composite stocks, all of the stocks that were in the fund were entirely transparent. So you could see what you were buying. You could see the proportion of weight of each stock. You could see everything. You could buy and sell it really simply through an online broker. And also because you were simply tracking an index and not relying on the prowess of a person picking the stocks for you, as a result of all of that, then you were in a position to simply lower your costs as well. So we had a low cost, transparent, very simple product. That is what an ETF is. Now, the fact that you're simply tracking an index means that, as I mentioned, there isn't anybody using their prowess in order to pick the stocks, etc. As a result, that's called passive. You're investing passively. You're investing on the basis that you simply want to track an index. So I came across a piece here in June, okay? And let me just show this to you. It's from the FT. Okay, you can see it over here, which is that passive fund ownership of US stocks overtakes active for the first time. So this actually just happened in June. And that is that, it was announced in June, it happened by the end of 2021. Passive funds accounted for 16% of the US stock market capitalization at the end of 2021, surpassing the 14% held by active funds, according to the Investment Company Institute, an industry body. And this represents a sharp reversal of the picture 10 years ago, when active funds held 20% of Wall Street stocks and passive ones held just 8%. Since then, the US has seen a cumulative net flow of more than $2 trillion from actively managed domestic funds to passive ones, and they are primarily ETFs. Now, what else could we have here when it comes to passive? Of course, the mutual fund industry still exists, so it's not just ETFs. The point here is that for the first time at the end of 2021, passively managed index funds have overtaken actively managed funds. And I think that that's a very striking number. The second thing I wanted then to point out over here is this one. Is that this was a piece that was published back in, just recently, and that is that in May, the global ETF industry attracted 80.28 billion, bringing net inflows this year to 417.87 billion, even as inflation concerns and the US Fed rate increases weigh on the markets. So in assets invested globally in the ETF industry hit 9.46 trillion. That is a big number, isn't it? 9.46 trillion at the end of May, which is up 1% from 9.36 trillion at the end of April, and down from the end of 2021. And also, I just want to mention down here that ETF assets under management worldwide will reach at least 18 trillion by 2026, which is a 14.6 compound annual growth rate between 2021 and 2026, if you're taking June over June. A report by PwC has found. And it really does show that there's a remarkable growth in the ETF area. Now, I was listening to a podcast quite recently, and in that podcast, which I want to get here for you, within that podcast there was I'm going to pull it up here for you now. There was a mention of the fact that I'm going to get this for you now, and that is This is the one. Okay, let me pull it up here for you now. Okay, so it was in this podcast, VectorVest's Lara Krieger dives into ESG ETFs, and she made a point that only 1% of the world's ETF AUM, which is assets under management, is invested in ESG ETFs. And I was really, I was quite interested by that figure actually. I thought it was an interesting figure to be aware of. And the reason that I think that it is particularly noteworthy is because I then began to wonder, if I was to invest in high ESG ETFs, would they have to have the label of ESG to go with them? And then that made me think. And that is that, let's just say that I decide I would like to simply buy one of the largest ETFs in the world. What I would like to do, all I would like to do, is I want to track the S&P 500. That's all. I simply want to track the US stock market. That's all, okay? That is it. That's all I want to do. Right. The thing is that perhaps I want to be able to do that in such a way where I am also investing with high ESG metrics, okay? So what I'm going to go down here is I'm going to go to the US, and in here I am going to search, and in here I'm going to put in here SPY, okay? So here we are. I would like to buy the S&P 500, and the SPY is the ticker code for the S&P 500 in State Street. So I'd like to buy something similar, let's say in iShares. Okay, here we go. IVV. Let's pop on over. Here we are. As we can see here, so far year to date, the S&P 500 is down 20%, okay, based on everything that's been happening. All right. Now, but what I want to do is I want to pop down here to my sustainability characteristics. And here I can see that the ESG rating is for AA. It's AA, which is very significant. It is AA, as in very significantly high. The ESG percentage coverage is 99%. The quality score is 7.9, which of course is close to 8. And I can see a variety of other metrics. But the point is that perhaps I am deciding that I want to invest in the US stock market. And I want to buy through this vehicle, because it's got a pretty high rating as it is. Let me take another one. I'm going to go to Vanguard, right? Vanguard US Total Stock Market Index ETF, okay? Very good. Here we are. And so this time I simply want to go through the whole market. Okay. So here I can take a look. This is in Australia. So what I'd like to do is US, here we are, VTI. Okay, domestic stocks. Okay. Let me scroll on down here. Performance, expense, price, historical price, portfolio composition. I can see my style box. Over here, weighted exposures, and I can see my stocks, my distributions, fund management, fund literature. You see, I have to keep looking. And this is the point, is that this has been one of the key developments that I have seen in iShares, is that iShares has now enabled me very simply to be able to evaluate the ESG characteristics of whatever investment that I'm looking for. Because I might say, well, actually, you know what, I don't want to buy just the US stock market. What I'd like to buy is I would like to buy the global stock market. So I'm going to view all funds. And in here, I'm going to look for IOO. Here we go. This is the global stock market. Let's take a look at this one. And let me now, okay, here I can see less bad, I suppose. This is down almost 18% in the year. And again, let me scroll on down here, AA again. In fact, the ESG quality score here is higher. It's 8.7. And I can see again, it covers most of the stocks, and I can see all sorts of things in here. But this is one of the developments that I'm seeing in the ESG industry, which is that perhaps I'm not looking necessarily for an ESG ETF. And therefore, any company, any ETF that has the ESG label, within that we may see, okay, that's money being invested into an ESG ETF. However, what I would argue, or what I would contend, is in fact something different. And that is that through the usage of sites like iShares, where we can clearly see the sustainability characteristics on most of the ETFs, then I am actually now in a position to make a decision, and I may say, Do I want the global stock market or the US stock market? Perhaps I'm indifferent between the two, and in reality, the US stock market is 71% of this anyway. So guess what? You know what? I'm indifferent between the two. What I am concerned about though is back up here. What I am concerned about is the ESG rating. And as a result, I'm going to now make a decision in between the two. And that is what got me thinking after I listened to this podcast, is perhaps we're underestimating the amount of money that's invested in ESG because it's not got the ESG label. One other thing that I want to make a comparison to you on before then I want to take you off into looking at the fast growing areas within this remit, and that is, can I show you the KLD ETF, right? KLD ETF, KLD 400. This is the first one that I came across. Okay, KLD 400. Here we go into iShares. Now, the sustainability characteristics, right? Let's pop on down there just to see. But what I particularly want, you can see here, right there, AA. In fact, the quality score here isn't as good as IOO. And I think this is what's important, is we need to be careful about the labels we're giving to things. Now, I have an ESG ETF watch list. I'm going to show it to you over here in a moment. I have it there. The question is this as ESG-esque as indeed some of the more global indices? Because the market pressure has been on these companies to be more environmentally friendly, to be better to their staff, to contribute more to their economies and to their communities, to be run better. But I particularly want to show you one thing down here. Okay, let's take a look at the stocks. Look what's here. Microsoft, Google, Tesla, Nvidia, Visa, Procter & Gamble, Home Depot, MasterCard, Coca-Cola. Let me go on to the next group here. AbbVie, PepsiCo, Merck, Verizon, Cisco, McDonald's, Adobe, Accenture, Disney and Salesforce. Now, you probably know all of those stocks the same way I do, right? I know every single one of those companies. They're all big household names. I've probably bought from several of them. Yep. And also I have invested in several of them along the way. These are the ESG ones, okay? This is the social index in particular. This is, if we come back up here, this is seeks to apply applies the business involvement screens. So adult entertainment, alcohol, civilian firearms, etc. All of these have been taken out. And the business involvement screens are based on revenue or percentage of revenue thresholds for certain categories and categorical exclusions for others, right? Now, so, we would say that this is a social ETF, more of an S of ESG. Let me now show you, what is in IBB, the S&P 500. Look at the companies that's in it in comparison. So you might say, oh, well, obviously, the companies that would be in this might be very different. Let's take a look. What have we got? Apple, Microsoft, Amazon, Alphabet, Tesla, Berkshire Hathaway, Johnson & Johnson, United Health, Exxon, Nvidia, Meta, JP Morgan, Chevron, Visa, Procter & Gamble, Home Depot, MasterCard, Pfizer and AbbVie. In fact, and I've only shown you the top 20 stocks in both cases, quite a lot of crossover. So again, I would point out the fact that sometimes we talk about ESG ETFs and we distinguish them. And as I say, according to that podcast, 1 in every $100 in the US that is invested in an ETF is invested in an ESG ETF or in ESG related. In my opinion though, I think that we're underestimating that by simply filtering perhaps by a label or by an ESG ETF in particular. When we actually look deeper than that, when we look at what the money is actually invested in, there's quite a significant amount of crossover. Okay, can I now go to you, right? I'm going to go to you and I'm going to ask you, have you ever invested in an ESG ETF specifically? So have you ever invested in an ESG ETF specifically? And while you're answering me, I am just going to show you one other point here. This was released by Statista on the 23rd of May. Is that the number of exchange traded funds worldwide grew markedly during the period of 2003 to 2021. There was 8,500 ETFs globally in 2021 in comparison to 276 in 2003. And as of 2021, there's managed assets of up to more than 10 trillion US dollars. And as you can see where PwC predicts that this is going to go. Okay, so Maria, Diana and Jim all say no, that you haven't invested in an ESG ETF. Now, Next question though I would ask to you all is, have you ever looked at the sustainability characteristics of an ETF and let that influence your decision, whether it was to continue to buy, to stop you from buying, to actively avoid, or maybe one that you were inclined to sell, but as a result of the sustainability statistics you decided to keep. So that's my second question is, have you ever used the sustainability metrics within that ETF to influence your decision making in any way? And let's hear from you now on that one. And while you're answering me on that, let's pop on over here now to VectorVest. Okay, so here's what we've got going on today. We can see here the market is very clearly down. Market's sad at the moment. We can see we're in a confirmed call, and we can also see that we've got some red lights. We have perhaps a weakening downtrend. Market's quite happy today. Nasdaq 100, the tech index is up 1.35%. The VectorVest composite is up 0.9%. And we can also see the S&P itself more broadly is up 0.79% as well. Okay, so now here is the question that I want to put to myself to be able to answer the title of our conversation today. And that is the fastest growing ETFs. Okay, so let's just really think about what we're saying there. First of all, the title of today's show is all around the fastest growing ETFs in ESG. But I want to start off with just wondering, first of all, what are the fastest growing ETFs? And that is not difficult for someone like me to find. Because all I need to do is go to Viewer, here. And I'm going to go to Viewer's Home. I'm going to go to ETF Viewer. Okay, here's all of the ETFs in the database. 1,779 of them here are trading in the US. And quite simply, I will go over here and I will click RT. RT is relative timing. And relative timing is simply looking at three things. Looking at direction, so the ones that are moving up to the top. Magnitude, so the ones that are moving up to the top the fastest, or moving higher the fastest. And dynamics. So the ones that are moving higher, fastest, with that volatility to the top, they are the type of stocks we're looking for. And is it any surprise to anybody here, that over here I can see that we have got some of the leveraged ones that are in here? Okay, so Maria says no, is that the sustainability characteristics of an ETF has not influenced her decision making at all. Interesting. I wonder whether you'll still say that in years to come, because I do hear more and more people considering that. So Maria, let's keep in contact. Let's keep chatting about that. Now, here we've got the leveraged ETFs. Now, I'm always conscious that when we talk about ETFs and the ones that are growing, if we're solely talking about ETFs and they're leveraged, of course, they will always be the ones that will move fastest. So here's what I'm going to do, is I am going to go over here to Unisearch, and in here what I'm going to do is I would like to take a look at stocks, and I'm going to filter by a watch list. And in this watch list, what I'm going to do is I'm going to go in here into ETFs. Now here is something that looks easy to do, but I'm going to show you otherwise. So what I'm going to do here is I'm just going to take out the leverage ones. Okay, we'll take out this and this one and this one and this one. Now let's say I don't know that ARC ETFs, let's say, are actively managed. So let's say I don't know anything about that. And I'm going to leave in the contra, so the contra would be the short ones. Okay, now, do you think at this stage, that I have taken out all of the ETFs that are leveraged? Do you think I have? Right, let's say you do, all right, because I've taken out 2x, 3x, and I press OK. Let's say I've done that. And I run the search again. Oh, looks like I haven't actually, because I have Direct Sion in here and I have Pro Shares in. Well, no, that's a different one. But I have macro sectors in here, 3x, etc. So Maria says some individual stocks within the ETF have better metrics and profit. Exactly, Maria. And I'm going to show you how to look for that as well. But before I do, can I just point out that you see some of the names of ETF providers actually point out the fact that they also lever. So I'm now going to go back in here, and I know, for example, Direction. I'm going to take out Direction here. Okay, and what I'm also going to do is I am going to take out ProShares. Okay, ProShares. Right, so that now will take care of it, won't it? Because I've taken out, you know, I've taken out Direction, and I've taken out a few others. Kind of still here, aren't they? Because now we can see, well, actually, ProShares are also... Now, you can see where I'm going here, is that if I'm trying to root these out one after the other, it can take me a long time. So rather than do that, and I was setting you up there to show you how you could easily fall into that trap, VectorVest has actually made it easier than that for you. So rather than go to Unisearch and actually build a watch list or a selection of watch lists one by rooting out those, what you can do is pop back over here to Viewer. Okay, go in here into Watch List Viewer, and in here in ETFs. In here, for example, one that you might want to do is ETFs Bullish. And ETFs Bullish, this list only contains those ETFs that are in interesting ideas if you want to be bullish or if you are bullish only. Okay? And I'm going to run that again. How did I manage to do that? How did I manage to do that? There we go. Okay, so that was my point that I wanted to make to you there, is that instead what you can simply do is that you can find a set of ETFs that that adhere to a certain list. So for example here, in this case of ETFs Bullish, that will completely remove all the ones that are short, for example. Also, if you simply want to look at the iShares ETFs that are in here, for example, let's say you want to do that, I can do that, and in here I can see the commodities. And sorry, let me also make sure that I'm pressing RT. Now I can see here the commodities China, US oil, Dow Jones US, I think that's probably energy, bonds here in 2022. So I can actually see here, if I solely want to look at the iShares ones, what the fastest moving ones might be. So to summarize my point on this is that if you want to look at the fastest moving ETFs, but you have a constraint, for example, you don't want leverage, for example, you don't want short, for example, you only want them to be by one provider, is rather than just jumping into Unisearch, looking at all ETFs together and then trying to scramble and root things out, VectorVest likely have the work done for you there as well. So now I'm going to go back to Unisearch. And now what I'm going to do is I'm not going to select all of this at all. What I'm going to do is I'm going to clear all of those. And I'm only going to look, for example, at iShares. And let's say that I only want a dividend, an ETF with a dividend yield greater than 2%. Just to give us a case in point, 2%. And I know I'm going to run the search. Here we go. And in fact, many of the ones that we saw there earlier on are there. And now I want to rank by RT. And as you can see now in here, I can get the ones, all of these, the top 9 here, the top 9 have all got an RT above 1. So Jim says, but there are leveraged ETFs. Yes, Jim. Okay, so just to go back over my point there again, is that if you're looking for a specific idea, so the bullish ETF list, for example, only offers ETFs that are suitable if you're bullish. And that means that they're not short or they're not leveraged and short, like leveraged short as well. The idea that what I'm making to you here is that if you're looking for one specific characteristic, like I was saying there, imagine if I wanted to take out the leveraged ones, and I simply go through the whole ETF list, and then I say, oh, well, that's that one, right? I need to pull that out, is rather than actually do that, instead I'm better off going to see if VectorVest already has a watch list. And so to give you another scenario, if I only wanted to look at ETFs that were bullish, you can see there's one that's there. If I only wanted to look at iShares, you can see there's one that's there. That was my point, is that check out and see if there's a watch list there that meets the criteria that you're actually looking for. Now, can I go back to Maria's point, right? So I've shown you now how to find the fastest growing ETFs using the VectorVest database. And now I want to go to Maria's point. And what I'd like to do now is, before I go to Maria's point, let's take a look at some of these, right? Let's just take a look at 1, 2, 3, 4, 5, right? Let's take a look here. And I'm going to graph all of these. Okay. And I'm looking here, clearly in this case, this is an ETF that, where was that? Back in December, it hit a low here of 28.85. Now we're up here at 44. It's still got a buy recommendation. There's the Dow Jones US Oil. That of course would be based on futures. Now since the high there of 106, it's fallen. That has from the 8th of June, so that's why you can see that it's just got a whole recommendation. And what I'm going to do is I'm going now to put on the RT. Okay. Now, this RT here is telling me to be careful because the RT seems to be trending down. And if that crosses down over 1, of course, that is where we would need to be in very careful territory. But for now, what I would be doing if I was interested in this, and a lot of people are interested, obviously, in a lot of energy companies at the moment, is I would be watching to see where this goes. And if it turns up, and of course, particularly if it stays over 1. Okay, let me keep going. Here we've got simply the Dow Jones energy sector. Similar story here. Similar story as well. Turned around there on the 8th of June from 49.30 down to 43.63 now. Again, it's something there that I would be watching quite closely. Is if I was considering this, I would be watching the RT. So this is iShares S&P EMG INF. EMF. Let's see what that is. EMF. Oh, okay. Yeah. I can see what this is. And what I did was I Googled it, but of course I didn't really have to do that. I could have just right-clicked and view stock analysis report. And here it is. The investment seeks to replicate net of expenses the S&P Emerging Markets Infrastructure Index, and the fund will invest at least 90% of assets in securities that comprise that index. And when I Googled it, of course, I got the same. I got the very same over here. Okay. So you can see there the way in which the graphs are going. Now, I did get a little bit of a clue, I have to say. Because as I took a look over here, I was seeing that all of these were H's, all of these were holes. And yet, the way in which VectorVest works is that a stock or an ETF only gets a whole recommendation if one of the following 4 are broken. The price needs to be above the stop price. Now, I knew that was in place anyway, because if the price is below the stop price, it gets a sell. But anyway, price above the stop price. The second thing is that the RT needs to be above 1. So I knew that was happening. The third thing, so first thing is the price needs to be greater than the stop price. The second thing is that the relative timing needs to be above 1, and I've already explained that. It is the dynamics, the magnitude, and the direction of the ETF's price that will determine that. And then the third thing is the VST needs to be above 1, which is the value, the safety, and the timing needs to be above 1. So I could see all of these were above 1, but yet, on the other hand, a range of these had a whole recommendation. So what was the bit that was missing? Well, there's one other thing that's missing, and that is that the price needs to be diverging away from the stop price. But in these 3 cases, let me just show you. In those 3 cases, I could, since the price is falling here, let me take everything else away. Let me add on the stop. You can see here that the price was falling, but it was falling faster than the stop. And the stop is a 13-week moving average adjusted for risk. So you can see exactly how that would work there as well. You see that right here? So since the stop was falling faster, down here, faster than the stop loss itself, as a result of that, that is why I could see, that's why I had a clue that these stocks weren't going to be particularly amazing when it came to these. So we can mix and match here in many different ways, and we can decide what is it that we want. Do we want the fastest moving ETFs, for example, solely on the basis of bullish? We do not want short, for example. And that's an example. I'm not saying we don't. I'm just saying as an example. Do we want the fastest moving ETFs, let's say in iShares? Or do we want the fastest moving ones when it comes to leveraged ETFs? So we can run all of that. We can run all that very, very simply using the ETF watch list viewer, or else we can use Unisearch as well. Because when I went to Unisearch, can I actually do one other thing? Let me just take off the dividend yield here. Let me just see when we run this. Is there anything in here that we get that's different? Not a lot. Oh, hold on. Hold on. There's 1, 2, 3, 4, 5. There's 5 stocks there with a buy recommendation. Let's take a quick look at these instead. Okay. And let me just check the RT here. I want to make sure that the RT is rising and pointing upwards. Okay. Which I can see here, and particularly here, particularly in China. And here in China again. I bought and sold that ETF many times, FXI. And China again. Yeah, China again. So you can see there in each of those cases, I can see that the fastest moving ETFs within iShares are, I can simply rank by RT and then I can go and get them. If I want to put in an additional parameter like I did in my own case, where I put in dividend yield, well then of course I can make sure that stays put there as well. Okay, now that is one way, that is certainly one way of doing it. And now what I want to do is I want to answer 3 more key points within the episode, right? So the first one here is Maria's point. And Maria's point is there are some individual stocks within the ETF that have better metrics and profit. And remember, I am going to get towards the ESG side of things as well. So Maria, let me go and let me just think about, how do I find the high performing stocks? Because again, I can just go to a stock viewer here, and instead of necessarily just going for relative timing, I can just do what is often done here, and I can simply find the largest, or not the largest, but the stocks with the highest VST rating. Okay, the stocks with the highest VST rating, which is the best combination of value, safety, and timing. Okay, so I can do that. And here we can see what they are: Matador, Titan, PDC Energy, Sanderson Farm, Valco Energy, Continental, and so on. And let's just take a look. What type of companies are these then, Maria? Petroleum, auto and truck, ETFs, petroleum, food, petroleum, and ETFs again. Right. So now what I could do is I might say, right, well, maybe I just want a petroleum ETF then. Maybe that's what I need to do. And then, of course, I could go back and I can take a look at my ETF viewer and I can go and I can see that. But another angle to this as well that I just want to take you through, because this was my second episode ago. It's been one of the most popular episodes so far, and that was one where I took people through how to analyse and invest for inflation. And I put forward a hypothesis at that stage, which is, how about we find companies, let me just delete this now. How about we find companies that have a net profit margin of at least 50%. In other words, that their sales are at least double their earnings per share. And where's net profit margin? Here we are. Net profit margin greater than 2. Okay, here we go. And I'm also going to say that within this, I want to see earnings per share is rising as well. EPS. Earnings per share. Where is it? Sorry. EPS is up here. And I want, sorry, GRT is what I'm looking for. That's why. GRT. GRT is growth. Growth, I want my growth rate to be at least 10%. And yeah, let's go with that. So here we go. I can now, what I basically want is I want to see what type of companies have I got in there. And now let me scroll on over here to the very, very right. And look what I've got again. Petroleum, auto and truck, food, petroleum. So now what I might say is, okay, let's pop on over here then. And let's take a look for a petroleum ETF. Petroleum ETF. So, and then I can go and I can take a search and I can go further from there then. So, of course, there are sector-based ETFs whereby I can view all funds and I can simply apply, let's say this in somewhere like iShares. What I can do is I can simply apply the product range of where I only want sectors and industries down here. And within those, I only want energy ETFs. Going to leave these two in. Yeah, going to leave all those in. Real estate, take out technology, and I'm going to take these out as well. Okay, and here we go. I can then find, let's say, whether it might be oil and gas, or whether it might be metals and mining, or let's say oil and equipment services, which loops me back right back to where I began, which is, but is this an ESG rated ETF? If I do this, is this an investment that would lead me towards a more a high ESG ETF? And this is my point. So what I've done is that I've taken Maria's idea here. I've taken Maria's idea and I thought, okay, where can I find good quality stocks? And then when I search for them in the VectorVest database with high net profit margin and let's say good growth rate, clearly see there's a big standout there when it comes to sector. Then loop on over here, take a look for those types of sectors within the ETF screener, and I'm going to take a look. I can see here the return to date has been up 46.18%, so I can see that over here. And now the next thing I'm going to do is I am now going to scroll on down here and let me take a look at its sustainability. AA 7.9. And again, I can see all sorts of other things that's in here. The last thing then that I would do is I would come back over here to the VectorVest system, and I come over here to the stock viewer, and now I put in here IEZ. Have I got the correct one? Yeah, IEZ. And I could then right click, view full stock analysis report. And then I can analyze the ETF analysis of that ETF. So we can see here, for example, at the moment that it's got a hold recommendation. It's saying that the RT is at 0.96, which is fair. I can see that the stock price, I can see that it's, the earnings growth rate, of course, because an ETF doesn't have earnings. I can see that the dividend yield here is at 0.65%. I can keep on going from there. So Maria, that was the second thing that I really wanted to point out here, which is that how do I loop back around? How do I start off by thinking what stocks are driving? How do I deduce a category here? And in this case, a sector was the way in which to do it. Then I can pop on over to the ETF screener. Then I can take a look at sustainability characteristics, then bring it back over here then into the VectorVest system to analyze this for how I might want to actually see it. Okay, now, one last thing then, two last things that I want to do then is let me take a look at my watch list of ESG ETFs on their own, okay? So I am now going to go to my watch lists over here, and I have created, no I haven't, there are ETFs, where are my ESG, close that. Here is where I'm looking for my ESG ETFs. Here we are. You're welcome, Maria. You're very, very welcome. Maria's just sent a lovely message in there. Just thank me. Now, here is the list, and generally speaking, these are the big ones, right? These are the ones that when we talk about ESG investments, this is generally speaking what we're talking about here. Okay. Oh. So we are talking about, and I have a collection here from all sorts of ETFs providers because I just think it's important. Let me go again by RT. Okay. So in here, what we can see is, right click here, let me auto fit everything. That's going to be easier. So you can see here I have Invesco Solar, Global Clean Energy, we've the Vanguard ESG ETF, we've an ETF here across Europe, Asia and the Far East, we've one across the US, we've KLD, which I showed you earlier, we've Vanguard, and we have Naveen ESG Midcap as well. When I look here very briefly, I can see that 3 of these have got a hold recommendation, And I can see that when it comes to RT, there is just one, and that's Invesco Solar. There is just one that has an RT above 1 at the moment. Also, I can see that one of them, Europe, Asia and the Far East, has got a dividend yield of 4%. The reason I'm having that reaction is that we've got a sell recommendation, so I'd be pretty conscious of doing that. But I have these all the time. It's just at the moment, the ESG area is underperforming the, let me just get this. I wanted to get this for you now. Yeah, so the ESG ETF arena is actually underperforming the broad-based market at the moment. And therefore, of course, first of all, they're quite out of favour. And partly that's because they're low rated on energy stocks, which of course have been doing very well. And you can see that's where they're able to attract to absorb the profit margin at the moment. In the eye of a storm when it comes to supply chain, the fact that prices are rising, etc. So as a result of that, and I know I haven't focused an awful lot on technology on this episode, but if you check out other episodes, I focus a lot on that. So I'm okay with leaving that to one side for much of today. But so overall, if you look at that, when you look at that particular area within ESG, then you will be able to see that on average, really, over the past while, is that ESG has been underperforming. And even if I was just to show you this very briefly, actually, let me just prove my point here to you very briefly. TT, everything over here. Let me just show you an ESG ETF broad-based market one, and I'll give you a comparison. So I'm just going to ESG. I'm going to give you a broad-based one. Let's say here's the USA, for example. And that is down 25%, whereas in comparison, if I was to show you IVV, which is the IVV iShares this year, you can see it's down 21. Okay, so generally speaking, that's what you're seeing, is that ESG is underperforming. That's one test, but I could do several of them. And again, remember that they are quite underweight when it comes to energy as well. I know the ones I've been showing you, but I wanted to highlight the fact that one sector does not eliminate them. But overall, remember, there is also a weighting factor that is different, and that's why we're seeing, in particular, ESG is underperforming. Now, one last thing I want to say to you is that sometimes we are also seeing innovation within the ESG industry, which is simply innovation within itself. And I wanted to show you the dual impact ETFs, right? The dual impact ETFs are, in my opinion, quite interesting because they're building their own indices, right? So here's 4 of them: cleaner transport, gender equality, healthy hearts, and clean oceans. And then they outline the rationale. So HART here, for example, HART is an ETF that they have. And within this, they point out also, they give some very interesting statistics in there. Okay, so that's about why it is what it is. And you can see here a range of the companies that is invested in it. But in particular, what I do want to point out to you is that something different that this ETF company does is that they actually donate part of the fees towards a charity partner as well at the same time. So that's what they do. They're a that's the dual impact. So they're thematic ESG solutions designed to address values-centered investment needs, the greater needs of our shared society, created in alignment with vetted not-for-profit organisations. Each ETF invests in emerging trends while simultaneously addressing a pressing ecological or social cause by supporting the non-profit's mission. Which I just thought, it's an interesting idea and something that's different again in the ESG space. And I just think that it's an interesting idea that may well gather pace, but it's one that I'm going to be watching, and I wanted to bring that into our conversation before we wrapped up today. So, on the dot of, well, it's 5 p.m. here in Ireland, it's 12 noon Eastern time, so wherever you are, we are finishing here right on the dot. And sorry, one last thing, Maria says, how does the expense to own an ETF get factored in? Okay, so Maria, what happens there is that first of all, you need to buy and sell through a broker, okay, in the same way you would have to buy a stock. And then there's the total expense ratio, and that is actually taken off the entire value of the ETF as well. So you don't pay an extra amount of a total expense ratio. That amount is actually taken off the fund. And as you can see here in the case of the dual impact funds, in those cases then that is split with the specific not-for-profit there. Okay, so ladies and indeed gentlemen, thank you very much indeed for joining me. I am back again on Friday for our next episode of Fantastic Female Fridays, and I'm going to be talking to Allegra from Factora Wealth. So make sure and join me for that episode right here on YouTube. And of course, if you would, I would really love if you would like this episode as well, so the people who are joining us from wherever they might be joining us or searching broadly speaking for this content, they will find us easier. And I see here, somebody's just sent in a message. A nice presentation. I appreciate your effort and I appreciate your comment. So thank you very much. And to all of you who are saying thank you there in the chat, really appreciate that as always. So everyone, between now and next time, thank you very much and goodbye.